Edward Yardeni of Yardeni Research joining us this morning. Rob Subbaraman of Nomura also with us. Welcome to both of you. Thank you so much for speaking with us this morning. Rob, I'm going to come to you first. What do you make of the tariff letter spree and the promise that more letters are to come?
Well, I guess the interesting thing for India was India didn't get a letter. And I think that's a good sign that a deal is getting close. And our sense at Nomura is India probably will get a deal which is kind of similar to the UK model. The 26% current reciprocal tariff rate may come down closer to the 10%. I think the other interesting thing with these letters is for several of these Asian countries, pretty high tariff rates, 25%, Korea, Japan. For Southeast Asia, you've got several over 30%. And I think transshipments is a big focus as well. So I think this encirclement of China and trying to, US trying to stop China evading, bypassing US tariffs through third countries is a new big focus.
Rob, hi, morning. Just trying to understand where you see this settling, because ultimately these are seemingly still negotiating tactics and there's expected to be further back and forth. And of course, as much as these countries are important in the large scheme of things, we're talking about the most important in the top 5. Of course, Japan is in this list, but as you've pointed out, India is not. I'm just wondering, global growth, global economic growth, what does this change, if at all, over the course of the coming months?
Well, look, I think there is a general sense that the extension to August 1st is providing wiggle room. And I think in the markets, the reaction has been fairly benign, especially Asia today. So there is a sense in the markets that this is a classic Trump-style escalate to de-escalate. And so, you know, where we end up could be come August 1, assuming no further extension, which is certainly possible, tariff rates could be lower. Personally, I feel the risk around this is markets are getting a little bit too sanguine that there'll be a big de-escalation. I think Trump is coming off many wins of foreign policy, of the One Big Beautiful Bill Act. And in addition to that, you look at the US equity market, it's close back to near record highs. I think the risk is Trump plays a bit harder ball this time around than the market is actually expecting.
Okay, Rob, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Dr. Edward Yardeni is with us as well. Dr. Yardeni, I was leading your overnight post and you're talking about what Peter Navarro was saying, 90 deals in 90 days, and we have only 2 thus far, but there are letters to show and yet another deadline which can be negotiated if the outcome is favorable. What's happening here?
Well, I think the big deadline is actually a domestic political one, and that is, while the midterm elections seem to be far off, they were going to occur November of next year. The fact of the matter is the president really can't afford to have a trade war that causes a recession in coming months going into next year, because it would cost the Republicans the thin minorities that they have in the Senate and in the House of Representatives. So I think the market is correct in anticipating that this trade issue will be pretty much behind us by the end of the summer. Maybe we'll see what sort of things come to a head on August 1st and whether that gets delayed again. But I think the president has to get this issue behind him. And I think he'll do that by getting letters of understanding, frameworks, which is what we have with China. A lot of vague kind of 1 or 2 or 5-page documents that really won't be all that specific. And at the end of the day, I think he's going to have his 10% tariff. He needs that to raise about $400 billion to provide some cushion against the widening deficit. But other than that, I think increasingly he's going to just kind of put together all the successes he's had. He can't afford to have a loss with a recession. and he'll start doing more of these big meetings in sports arenas to gloat about his successes in order to get the Republicans to keep their majorities in Congress.
Dr. Yardeni, so point well made. All of this, as you pointed out, and we completely understand it, is playing out simultaneously in the political arena in the US as well,
Yes.
And in the context of this big, beautiful bill that they've just signed. And so there is pressure, as you pointed out. So in your estimation, and I know that this is hard to estimate, how long do you think that this is going to take to settle down? And if it doesn't, at what point do you think global investors are going to look through it and say, hey, you know what, this is not something we pay too much attention to, go back to earnings, go back to the real data?
I think we're kind of there now.
Okay.
Since March, I've been arguing that this issue would be behind us by the end of the summer, and it's pretty much going according to plan, because obviously what's important here for what I do, investment strategy, is the direction of the market. And I did think that we would have a correction on all the uncertainty, but as the uncertainty dissipated, as it abated, as we've sort of learned that Trump is negotiating, that a lot of his bluster is the way he negotiates, and that at the end of the day, we may find that when all is said and done, things do settle down and the market can go back to focusing on earnings. Now, in the United States, first quarter earnings were much better than expected. And it looks like second quarter earnings will also be much better than expected, because expectations have been knocked down so much by what I call Trump tariff turmoil. Trump tariff turmoil obviously still with us, but I think the market is taking it more in stride. It's not getting as upset about it.
Mr. Yardeni, how do you see India? And earlier, Rob talked about how the fact that India has not got a letter is good. We have more time for negotiations is good. But we're also hearing that those red lines is something that India is not willing to cross. Opening up the dairy sector, the agricultural sector, that's still an issue.
Yeah, well, I think Trump figured that the U.S. is the world's largest economy. The U.S. is the world's biggest importer. It's the biggest customer for a lot of countries, including India. And that would lead to very quick deals, but it hasn't quite worked out that way. And Peter Navarro, his trade representative, back in April 11th, said, we have 90 days of postponement of Liberation Day, and we'll get 90 deals in that time frame. Well, as you pointed out, we only have 2 deals with the UK and Vietnam and 1 framework with China. So it hasn't been easy at all. Countries do have their own self-interest. They're not just kind of going to roll over and do whatever the President Trump wants them to do. And so I think he's going to have to kind of declare victory by coming up with some vague agreements that don't necessarily address all the specifics, like dairy issues with India. There are a lot of issues when it comes to trade. If you really sit down and negotiate a trade deal, it could take 2 years because there's so many details involved. There's so many domestic interests involved. It's not easy. And to assume that this could all be done in 90 days was rather naive, I think. But again, I think the president has a lot of successes so far. He doesn't need this trade war to really cause him problems with the U.S. economy.
Yeah, you said it. Rob, the final word on the U.S. economy. I'm just wondering, of course, we are seeing in a few cases in the letters that got sent out a small reduction in the tariffs, but they're significantly higher than they were before. I'm just wondering about the implications, as Dr. Yardeni just pointed out, it's not reflected in earnings yet, the slowdown. It's actually better than expected in the first quarter and in the second quarter likely. And so therefore, the question is, do you foresee a recession at some point towards the end of this year or heading into next year? Do you see significant slowdown in growth, and do you see inflation spiking on account of tariffs?
So out of all those, I'd say the one we're most concerned about is inflation spiking. And the interesting thing is the next US CPI report is coming out July 15. So before the new August 1 tariff deadline. And I think the risk around that report is we start to see some tariff impact showing up in US inflation. So I think right now the consensus is US core CPI will go up from 2.8 to 3%. We think by the fourth quarter it could be around 3.25%. I think that will be very interesting because if US inflation does start to pick up a bit, it's going to put a lot more pressure on the Trump administration to say, hey, these tariffs are having some negative effect. It'll make it harder for the Fed to cut rates if inflation goes up. And so then maybe actually the economic data, the inflation data, may actually be a key factor that actually causes Trump to ease off on the tariff rhetoric and agree to lower rates come August 1. As Dr. Yardeni said, we do have the midterms approaching. Last thing I would say, just going back to India, the interesting thing for India is if India does get a pretty decent deal here, let's say something similar to the UK where an average tariff rate is close to around 10%, that is better than most other countries in Asia that we're seeing right now. And India in the medium term could benefit a lot from trade diversion, a lot more foreign direct investment coming to India, set up factories in India, because ultimately it's got a lower tariff rate with the US, the biggest consumer in the world.
Rob, thanks so much for joining us this morning. Dr. Yardeni as well. Always a pleasure speaking with you and look forward to the next chat as well.
Thank you.